So my name is Fadi Bizri. I'm a partner at a venture capital fund based in Beirut called BNY Venture Partners. We're a $46 million fund. We invest in Lebanon and globally. We love fintech. Fintech is one of the most favorite topics that we have. But like many investors, we always ask ourselves, what is the hype part and what is the real substantial part where real value is being created? Thankfully, we have an amazing panel today to talk about that. There's 4 subsectors of fintech that we're going to talk about now. We're going to talk about Bitcoin, about blockchain for smart contracts. We're going to talk about wealth management with AI. We're going to talk about peer-to-peer management and peer-to-peer lending. So without further ado, I would like to invite on stage Ola, Omar, Craig, and Hadi. Can you join me, please? How are you guys?
Hi.
Good?
Good.
All right. So ladies first. Ola, how are you? All good?
Yeah, doing well.
Ola, you're the co-founder of BitOasis. BitOasis is a Bitcoin wallet and exchange. So Bitcoin was really, really cool and really hot a couple of years ago, and everyone was talking about it. Now, it's still highly valued versus a dollar. If you look at it, it's gone up. What are the latest trends? What's going on? What is still incredibly compelling about Bitcoin and BitOasis' offering in general?
So we started out being a Bitcoin wallet and digital currency exchange. So now we've added more digital tokens to the platform. So we're embracing other public blockchains as well, mainly because we believe that public blockchain protocols such as Bitcoin and Ethereum is going to fundamentally change how financial services look today. We're specifically focused on fintech and payments, so that's sort of the vertical that we're looking into. Don't kind of, I guess, get too swayed with what the media covers because that kind of drives like the hype. The matter of fact is that transactions on the Bitcoin protocol have been increasing 300% year over year. The price has been increased at every metric on the Bitcoin protocol, same as actually also Ethereum in the past 12 months, have been showing a significant growth in terms of consumer adoption. For us, we believe that Bitcoin, Ethereum, public blockchains, also Zcash is a new protocol out there, is going to change how people think about money, how they transact online, and it's going to fundamentally change how we see or kind of understand e-commerce today. So for example, we've got tens of thousands of customers across Middle East and North Africa. We've got people on Saudi forums selling secondhand products and accepting payments using Bitcoin without setting up any businesses. You just have a Bitcoin wallet, instantly accept payments globally. We've got contractors and freelancers in Egypt being paid internationally using Bitcoin. We've got small businesses in Dubai using our platform and transacting using Bitcoin and Ethereum to accept payments cross-border. So what you see is that the more adoption is happening globally and the bigger sort of like the network effects of public blockchains, such as mainly Bitcoin today, obviously, because it's the oldest one around, you start seeing how it's embracing e-commerce, how it's empowering people to transact online, and providing alternative ways for people to cheaply, more conveniently, and in a faster way to transact online.
Quick question. So you're announcing new products coming out soon. Can you help us visualize what's the next cool new thing? Because I think everyone understands Bitcoin, and you offer comments, people can buy and sell stuff. What do you think is a cool next thing you'd like to launch at BitOasis?
Oh, definitely. So when we first set out to build our platform, we were focused on infrastructure. So if you want people to adopt digital currencies and transact in digital currencies, you have to make it easy for them to buy and sell Bitcoin. So you build sort of the on-ramps and the off-ramps, and then you build liquidity in those markets. So that's like one sort of layer that you need to build so that you enable people to start transacting using Bitcoin digital currencies. So the second thing that we are actually in the process of launching is creating APIs, launching APIs for our exchanges so that developers out there, small businesses, startups, mobile peer-to-peer type of payment apps can start using our infrastructure and our liquidity and exchange and wallets to enable cross-border payments, for example, as one application, peer-to-peer lending, for example, using Bitcoin or Ethereum. So we're releasing those APIs so that we unlock our infrastructure for other developers and startups to build on our liquidity.
Great. Underlying the Bitcoin is the blockchain protocol. And we have Hadi Abalin here. You're the managing director of Autonomous. It's a company based in Singapore, but that works globally. Autonomous is it does, helps companies go on the blockchain. Can you help us visualize what the hell that means and why is that such an amazing and awesome thing?
Of course. So really, we want all of you to be able to create a company as easily as being able to go on Facebook and create a Facebook group. I mean, it should be that simple. Most people in this room could, if they pursued their interests, create 10 companies or 12 companies over their lifetime to capture the economic benefit of working with their peers. And so our philosophy is, and why are we doing this? So we want it to be extremely easy to be able to go online, create a company, manage it, attract people to come with you, issue shares, fund it, fundraise it on blockchain. And the reason why blockchain helps us do this is because in every country where this is available to you, so right now, Singapore, Hong Kong, UK, Cayman, BVI, Delaware as of June, July, and then hopefully in Dubai also, here, and we're working here with Dubai government through Dubai Future Accelerators to make sure that this is doable here as well, so that we can have a world first out of Dubai. In each of these jurisdictions, anything you do digitally on the platform is legally valid in the countries in which you've set up your company. So where does blockchain come into it? For us, we're not about currencies, okay? We're not about what Allah does, which is extremely valuable, but blockchain gives both the user as well as the governments and the institutions the confidence that when something is done digitally, it is also uniquely registered such that it is legally valid in that country. So this is where it comes in for us. It's a validity pool that is secure and immutable, and that gives everybody confidence across the board. So what that means is that right now we have over 200 companies on our commercial platform, and it's growing exponentially. But we also use our engineering to build corporate registries, business registries, as well as private company exchanges. And so what it allows is that if you're an investor, for example, and for you, for BYVP, you wanna let's say have a look at Autonomous's funding round. We are on the platform, we're on blockchain. Our whole history is recorded. So your due diligence is like 5 seconds, okay? And then you know everyone who's in the cap table. You know exactly what shares they own. You know what are the characteristics of those shares. You know their voting rights. You know liquidity preferences. All of that, just right there. And there's one record for everything. So you have absolute confidence that that is what that is.
So even one way to visualize the blockchain is that it also allows you to go back in time. Like you want to visualize every single transaction. In the case of a company, every single share transfer, who transferred it, who are the shareholders, and if I'm not mistaken, the KYC. So when you vet a potential shareholder to see if they're legitimate, if there's nothing illegal about them, all of that is stored on the blockchain, and those who have access can immediately see this is valid, which saves them time and helps them reduce mistakes. Is that correct?
That's right. And also, in the context of other institutions such as banks, so they're able to go in there and see, let's say if they wanted to lend a company some money, they could go in there and see, have these shares been pledged as collateral before or not? So we can mark them because they're smart contracts. So we can say these 10 shares, you can't lend against them anymore because they've already been lent against. So no one can go into a bank in the morning and try and get a loan on these 10 shares and then go to another bank in the afternoon and try and get a loan on those 10 shares, because they think that the paperwork is going to be too slow or because the databases are not perfectly synchronized or whatever. Because it's blockchain, it's one record, and you have perfect visibility and security that that is the repository of truth.
Awesome. Thanks, Hadi. So blockchain is on one end of the new technology side. Now, wealth management, we look at Omar, is, typically seen as old school. You imagine big offices with big wooden desks in Switzerland and people smoking cigars and shifting around millions of dollars. And then here you come, you're the co-founder of Finalytics, and you say you're doing wealth management online with a lot of tech behind it. And that makes it a really much better way than the current way. Can you help us understand why that is?
Okay, let me, I might change a bit of the premise of what you stated. What Finalytics does is we essentially
Ahmad, for the mic, just keep it close.
With Finalytics, what we do is we consolidate portfolios of ultra-high net worth individuals, families, and external asset managers. Once we collect this data, we run some analytics, and one of the key things we're identifying for clients is reducing their information asymmetry that they have naturally with financial institutions, and I'll explain that a bit more in a moment. But ultimately, what Finalytics is really showing is identifying which financial institutions are underperforming and overcharging their clients. Now, at the moment, as I mentioned, we're only focused on a particular niche segment because it is a rather, complicated exercise. As some of you may realize that typically the high net worth segment deals with private bankers. Now, what is happening typically is that the financial institutions, when they publish statements to their clients, they don't disclose certain critical elements to their clients. One includes fees, transaction fees, leverage costs, which assets, you're talking about pledging assets at the moment. Banks don't openly disclose which assets were pledged to purchase perhaps another security and so forth. So what we've done is we've decoupled all of that information. We use different mechanisms to get the data into our tool. Then the tool then naturally spits out what the client could potentially do to identify sort of savings by either moving their assets from one institution to another or changing their financial advisors. One of the other interesting things we've learned during the course of this is that the banks inherently don't disclose a lot of information. So for example, when we take a look at a typical financial statement, about 75% of the data that we enter into Finalytics comes from the financial statement. 25% of the data we need to dig further, and in the case of the niche group of clients that we deal with, we literally have to ask our clients to ask a certain set of questions to their private advisors. And that's also resulted in a lot of interesting conversations, because one can just imagine that for high net worth clients, you have a private banking relationship that might be 10 years long. Now, if you as a high net worth individual has never asked your banker a single question related to fees and performance over the past 10 years, they've been very surprised to hear some of the questions that clients are asking them. So in the Finalytics data universe, we have data coming in from statements. Then we have very specific questions that we have designed for a handful of banks, I would say about 25 to 30 of the larger international banks, because we know what information is on their statements and what's missing. We consolidate that information, we plow it into our tool, and then our tool has, it's overall a 4-quadrant system that then provides clients with advice.
All right. You mentioned also you're building some sort of a bot on the back end.
Yeah.
But I would imagine that would make the private bankers and the wealth managers not very happy.
Yeah.
But you need them, right?
Yeah.
So how would that work?
Again, this is a very good question. What's been interesting is that when wealth managers have seen our tool, and we've certainly socialized it with different financial institutions, they like it and dislike it at the same time. They dislike it because of the transparent nature of Finalytics. Now, as a consequence, because currently, we launched at the 1st of August last summer, and we're sort of our assets under observation, that's the terminology we use, is just over 300 million. We've got about 8 different clients at the moment. And what's interesting is that those clients then have asked us to provide advice. Now, we're not in the advice business, because once you're in the advice business, you have to be regulated. So one of the things that we're now investigating is a bot or a robo-type platform, and I think some of the folks in the audience must be familiar to with robo-platforms because the terminology has caught on quite a bit in the fintech arena. It all started in Silicon Valley about 5-6 years ago with two companies. One is called Wealthfront, the other is called Betterment. And now it's slowly started to expand into Europe and into Asia. And it's, of course, there's different folks trying to do it here in the Middle East. And what we're trying to do with that is that, how can we leverage this data, this information, to ultimately help our clients by being interactive with them with a robot. So what we're trying to build is something that sort of talks back, right? So if, for example, clients are on the platform and they want to identify that should I sell a certain security or should I purchase a certain security or what's happening with gold today, they would have the ability to, in a very easy way, get responses back from the engine that we're trying to build.
All right. Thank you.
Yep.
All right. Another very, very interesting topic that I love personally is peer-to-peer lending. So we have Craig Moore, you're the co-founder, the CEO of Beehive, a peer-to-peer lending company based here, and that focuses on peer-to-peer lending for SMEs.
Yes,
So
yeah, that's correct.
my question is peer-to-peer lending, which initially was very counterintuitive, people thought when it started way back, obviously in the West, nobody's going to do that, or there's too much risk and so on. So is that working in this region, one? And two, what kind of technology are you building to better vet your SMEs and the other side of and the investors?
Sure. So I guess the first answer is yes, it is working. It's taken a little bit of time for particularly in this market, just I guess to educate the market as to exactly what peer-to-peer is, how it works. So we're all about helping SMEs, credit-worthy SMEs that would normally go to a bank, come onto our platform and access finance from, up until this point, retail investors. So all individuals in this hall would be able to go onto our platform once registered, look at different business loan requests, and then place bids from as little as 100 dirhams, so circa $25. Now, the idea for us is to be effectively the lender of first resort. So if you think about, if we flip this around and look at this from an SME's perspective, if an SME comes onto the Beehive platform and they're a good quality SME, well run, good financials, growing, looking to take on finance for the right reasons, then they're typically going to save 25 to 30% on their cost of finance by coming onto our platform versus taking unsecured finance from banks, certainly in the UAE. Typically, if we get given all the paperwork we need and all the necessary financial statements, then we can give a lending decision in about 48 to 72 hours. Then we on our technology platform, uses an auction process. So the idea is that if a business is looking for 500,000 dirhams, that will go onto the marketplace, investors will check it out, they'll then make a bid, say 1,000 dirhams, and I'm looking for 12%, and that will continue as other individual investors all make bids. As soon as the 500,000 target is reached, the next bid will kick out the most expensive bid. So you'll create a reverse auction, like a reverse eBay. And what that does over the end of the auction period is make sure that the business receives the lowest possible weighted cost average of funding, and the individual investors get the return that they want relative to the risk. So we've been able to create that with an idea of being the lender of first resort rather than being the lender of last resort, which I think probably goes to your question a little bit in the early days. A lot of retail investors were worried that businesses were going to peer-to-peer platforms because they couldn't get bank finance.
Absolutely. And don't you have some sort of cultural pushback here? Because in this region of the world, being associated with or dealing with a bank or with recognized institutions is a big deal. And there you are, you've disintermediated the whole thing, and it's just investors that you somehow vet and SMEs that you somehow vet. Did you find that there was an issue in getting people on board? You mentioned there was a lot of education to be done initially, correct?
Yeah, so I think that's why when we set up, it was important that we had to not only educate the market, but we were going to get our liquidity from retail investors. Yeah. Right? So therefore, we had to make sure that we had a very transparent business model, that people could feel comfortable in the credit assessments that we were doing on businesses. When we set up, there wasn't a credit bureau. in the UAE. So it's very unlike doing it in the UK or the US, where you have Experian feeds, you have Companies House. It's very easy to get hold of financial data, and you have credit scoring, FICO scores, etc. None of that exists here. So we had to build a proprietary credit model from scratch. But what that means is it means we've got a credit model to go into other kind of emerging market, developing market environments, and that's what we're already looking to do. So we take our learnings here and then look at other countries where we believe we can either take term loan type financing or invoice financing, because not all SMEs need exactly the same type of finance. Some will need a 3-year loan, amortized over 3 years. Others need short-term finance, 60 to 120 days against debtors. You know, one of the things we've seen here is that people were getting squeezed a bit last year, and it fed all the way through the supply chain. So that ability to just to be able to sell some of those invoices for short-term finance really helps the businesses just get over the hump of any squeeze.
Okay. What's the typical profile of the SMEs that come to you in terms of size, in terms of cash flow positivity, and the counter? What's the typical profile of the people putting in money?
So I'll take those in reverse order. In terms of investors, it's a real broad range. Right? So we've got guys on the platform will have 1,000 dirhams invested. Because you can invest from 100 dirhams, they can spread those investments across multiple businesses. And it's one of the things we always encourage investors to do is diversify. But then we've got individuals that have got, you know, the equivalent of $1 million on the platform and everything in between. So you know, you'll always get the bankers and those guys that quite like alternative investments, and the average return is 10-11% for these guys per annum. So they're quite interested in it as an alternative investment. So a real broad range, but predominantly professional people, right, who understand that if you're going to earn that kind of return, there's going to be a degree of risk, and you're not going to put all your savings into those accounts. In terms of the businesses, it's the S and the M. So we've got businesses that are doing 2.5 million dirham turnovers, a couple of years old, growing well, looking to take on money for working capital expansion, all the way up to businesses that are turning 100 million dirhams, and quite frankly, like coming to us because they've either taken finance over the platform before and enjoyed the user experience, and now they'll come to us and say, listen, we actually need more finance than you can do, but we're going to split our financing requirements, and we're going to put 1 million dirhams on Beehive because we like it. We reach out to all your investors, you know, we get the PR, we get the marketing with it, and then we might take another 2 million from the banks. But as Beehive grows, they want to take all 3 million from Beehive. Right? So our challenge at the moment isn't opportunities, it's actually liquidity from the retail, which was part of the reason why we've just pushed and been, we're now regulated by the DFSA, and a lot of that regulation was, one, to give retail investors comfort as a regulated entity and the first regulated peer-to-peer in the MENA region, but secondly, that we can go and start talking to institutions as well to start putting money over the platform. Actually,
Omar, this might be an asset class that your
Absolutely.
High net worth be like, okay, I'm going to put 1% of my $50 million net worth into a peer-to-peer entity, and then just benefit from the returns profile of that. Because I would assume this is a decent, or in terms of risk reward, it's actually relatively high. You have a very high success rate on the returns of the loans themselves, right?
Yeah, I mean, considering that the dirham is fixed to the dollar, we're talking about a dollar return. Our default rate is a lot lower than any of the banks here. So in the 2.5 years, our default rate's about 1.5%. Our average gross for an investor is around 12.5%, 13%. So you can see, there's a decent return around kind of 10, 11% for investors.
How does that sound to you, Omar? 10, 11%?
Yeah, no, it sounds very good. I think we're going to have a chat.
Announce an MOU right now on stage. Is that?
And then we've done our proof of concept on Ethereum. We've already done Ethereum blockchain on smart contracts. So we'll start linking in with these guys as well.
Excellent. Exactly. All right. So I have a devil's advocate question for those whose businesses are mostly in this region. So Ola and Craig. As a VC, well, not as a VC, as an ex-entrepreneur maybe, I sometimes ask myself, well, am I in the right region? Like, there is an argument to be made. There's an argument to be made, well, it's new territory and we can take it on. And there's an argument to be made, well, there's other not fully saturated territories where you have FICO-like scoring, where you have, more modern regulation. Do you ever have these things when it's 3 in the morning and you can't sleep and you have issues to deal with in the next day?
I think those are questions that any entrepreneur setting up or trying to kind of push a new business model or technology in a region that is no kind of clarity on regulation, probably certain hurdles in the startup world. Those are questions that very naturally you'd think of. But I think where you have hurdles, that's the opportunity for you to build a defensible business. So I think one of the panels early today were saying that how fragmented the Middle East, North Africa market is, but that also presents itself as an opportunity for real entrepreneurs in the region. The other thing as well, for what we do and sort of how we're seeing the Bitcoin and public blockchains, how they're empowering individuals to transact online and kind of presenting itself as an alternative for traditional banking networks, I think we are in the right region. I think emerging markets is the right region for that type of technology. Yes, obviously you need a hardcore kind of A-star team to be able to execute on the ground in this sort of specific localized environment. But where there's difficulty, there's huge opportunity, and I think there's a huge need as well. It's all about execution at this point.
I think I'd also add to that, I agree with that. I'd also add that ultimately, as an entrepreneur or as a startup business, you're trying to build a brand as well. And the one thing that you've probably seen with a lot of tech firms over the last 20 years is that ability to pivot. So if you find out that, okay, your original idea maybe isn't as lucrative as an idea you may think of 2 years down the line, you've got that opportunity to pivot. So if you can build a brand, then there are many different product lines that you can start to kind of flow down from that. The most important thing you're looking for is to build that trust with your consumers and your customers, and also to be able to make sure that you keep that DNA, you keep that startup DNA. So if you see ideas and you see areas to either collaborate, if you think about what bank was, a bank has many different many different lines, but each one of those profit pools is getting picked off, right, by individual, whether it's forex, whether it's money transfers, Bitcoin, peer-to-peer, etc. And then you start to put a dotted line around those. You've got a virtual bank by default through collaboration networks. And if you look at somebody like Zopa in the UK, which was the first peer-to-peer, they've already come out and said we're going to become a bank. Right, so they're pivoting. They started as a personal peer-to-peer. They are already going for a banking license in the UK, and they will be doing credit cards, they'll be doing car loans, they'll be doing everything. Because if you don't have the legacy, right, and the problem that the banks have got, they've got the insurance guys have got 40 years worth of application legacy running insurance software programs. So, there's great opportunity for everybody to start collaborating and create ecosystems that can move very, very quickly.
Adding to that point, quickly, actually, just to complement your point on brand and trust, specifically with fintech, you're always local before you are global, because the trust aspect is all about building localized consumer products and gaining the trust of the local consumer. Whatever market you are, even if you're a global company, you would still be acting local in the local context that you're in.
I just wanted to add that I think when you speak about this region, you really have to take into context also the demographics and urbanization and digitization. So with such a high proportion of young people across MENA, and with the urbanization attraction of, for example, Dubai, that sucking in the best and the brightest, and people growing up digitally native and growing up expecting that they're able to do everything that they can that is available around the world and from here. And so to be able to enable that through a location like Dubai is actually quite unique, because you're tapping into a rate of growth of usage that is unavailable pretty much everywhere else in the world, especially when you factor in the spending power and the wealth that is available in this region too.
Interesting, very interesting. All right, actually one thing we were all discussing before we came on stage is that even though each one of the esteemed entrepreneurs here deals with their own silos, actually there's a lot of potential collaboration and interoperability. One can imagine, for example, an entrepreneur who wants to set up a company really quickly, so he puts it on the blockchain using Autonomous. and I own a few Bitcoins, so you can start funding it with some Bitcoins. And then, I want to raise some more money after I start selling, so I bring out take out a small loan using Beehive, and then I exit the business, and then I get my wealth manager to take care of it using Finalytics. So there's actually a lot of collaboration that's possible in that sector.
That's a new model for setting up companies in the Middle East and exiting as well.
That's like, the setting up a company and exiting and retiring on an island stack, essentially, if you think about it.
Well, you could also use Ethereum to set up autonomous venture capital funds as well, right?
Yeah, actually.
It's so we're actually blockchain infrastructure agnostic. But yes, you can go to the website now. You can set up a fund, as well as a company.
In Lebanon, we have a somewhat archaic company creation process, and our laws are a bit old. We're modernizing that, but it's not there yet. I mean, if I could set it up, if we can go back in time a year and set up our fund using autonomous, the amount of time we would have saved would have been out of this world. I really wish we could do that. Maybe soon.
We can still onboard you.
Yeah, well, let's talk about it. Let's talk about it. All right. So we're getting towards the end of the talk. Obviously, I highly encourage everyone to talk to the entrepreneurs after our panel. Again, the essence of fintech is that you have to know exactly what you're doing and to really focus and to do it well, just to kind of avoid the hype. So it's actually very refreshing to see how everyone is really have thought out so much about the various topics. So anyways, thank you guys. I'd like to thank you a lot. Can we give them a nice round of applause?
Thank you.
Thank you.